You're probably sitting there wondering whether you should get a personal loan, a personal credit card, or a personal line of credit. Well, guess what? In today's conversation, I want to explain to you the differences and similarities between loans, credit cards, and lines of credit. And more importantly, I will explain to you how to use each product to boost your FICO score and how to live a financially responsible life. Don't go anywhere. You're going to love today's conversation, I guarantee it. Welcome back, folks, to another edition of the Awesome Study Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to explain the dichotomy but also the similarities between personal loans, personal credit cards, and personal lines of credit. Let's first start with loans versus line of credit, okay? If you have to choose between a loan and a line of credit, let me first explain to you what those are. I mean, you might be thinking, I think I have a clear idea, but you don't. Let me break it down for you. Personal loans. Well, with personal loans, we're speaking about money, right? So a personal loan is a type of loan that gives you a fixed amount of funding distributed in a lump sum. So you want to use a personal loan for a one-time expenditure. Let me repeat that. You want to use a personal loan for a one-time expenditure. So your payment with a personal loan will be the same each month because they have fixed interest rates, right? The loans will have fixed interest rates and a fixed repayment timeline. So for example, you get a loan from Navy Fed and this is $10,000 and the term is 5 years and they might say, well, you pay us $250 every month. So that's basically the payment. So you can get a personal loan from a local bank, a large national bank, a credit union, or online lender. You can use a loan to pay down credit card debt, finance a large purchase, pay for a wedding, pay off student loans, you name it. Let's talk about personal lines of credit. Big decision time, big decision time. Are you currently in the market for a personal line of credit? If yes, you need to understand right now that it is an unsecured revolving credit line. It's like a credit card. And so with the personal line of credit, you have a credit line limit and a variable interest rate. So if you're trying to manage purchases and are not really clear on the overall scope of the cost, a personal line of credit could be an ideal solution, okay? You can use the cash for a home improvement project, overdraft protection, emergency situation, or to supplement irregular income. So if you're not really sure of how much you need to borrow or how often, a personal line of credit can be a flexible lending option. So this is just the breakdown you need to have in terms of loans versus lines of credit. And one thing I also want to say is that if you have to choose between a loan and a line of credit, you need to think about the similarities and the differences. So what are the similarities? Both require interest payments. Applying will cause a hard credit check. The baseline requirements for both a personal loan and a personal line of credit are typically the same. The lender might ask for they might ask you to meet some requirements in terms of age, employment, financial situation, credit score, that kind of stuff. Most personal loans and lines of credit are unsecured, meaning that you don't need to use an asset like your home or car as collateral. So this makes them a slightly less risky option than something like a home equity loan, okay? So those are the biggest similarities. Let's talk about the biggest differences. So personal lines of credit usually have higher interest rate because they involve greater risk on the part of the lender. So you might have something like APR, APR on the personal line of credit might be 10% plus prime or plus LIBOR, whatever it is. Okay, interest rates with a personal line of credit are variable, unlike those of personal loans, which are determined during the application process and remain fixed for the life of the loan. Okay, and the way you receive and repay funds is perhaps the biggest difference when you analyze a loan versus a line of credit. So a personal line of credit acts more like a credit card, right? Because it has a revolving credit line and accumulated interest on any unpaid balance. You can take out money as you need, but you will need to make minimum monthly payments as you would with a credit card. A personal loan, on the other hand, gives you the full amount of the loan up front. You will then pay off the loan in monthly installments over a set repayment period. So those are the differences. Now, you need to determine which one is best for you. How do you do that? It really depends on how urgent your situation is. Do you have money right now? Are you struggling to make ends meet? What is your liquidity situation? Talk to me about that. So if you're not sure exactly how much money you will need to borrow, a personal line of credit will be an ideal solution because it is great for ongoing expenses such as unpredictable home repair project. Okay. On the other hand, personal loans offer fixed interest rates that don't change for the duration of the loan. This means that you can expect the same payment amount due for each installment, making managing your finances easier. Let's talk about loans versus credit cards. Are you with me? Are you with me? Okay, if you have to choose between a loan and a credit card, first of all, I'm not going to explain to you what a credit card is. Everybody understand that. I'm not going to do the same thing for a personal loan. Now, but one thing you need to pay attention to is that when an unexpected expense comes your way or you've been wanting to make a larger purchase, you always need to think about a loan. Unless your credit card limit is kind of high and you are financially responsible and you know you will pay off this large amounts very easily. Because otherwise, a credit card is usually for everyday expenses. Let me repeat that. When we talk about credit card, a credit card is like a revolving line of credit, meaning that you can repeatedly borrow funds up to the borrowing threshold, also known as your credit limits. So because of this, a credit card is typically best for ongoing daily purchases. I'm talking about smaller amounts. I'm talking about $50 here, $100 there, $75 here, things like grocery, minor shopping, that kind of stuff. But you know what? You can use a credit card for to take care of a travel, for instance. For let's say you have planned a trip, a family trip, you're going somewhere, you're going to Acapulco, you name it, whatever. If you plan it properly, you can use a credit card to take care of that, right? Because you have travel rewards, you have mileage, you have all that kind of a strategy that goes behind using a credit card for travel. Okay, so what are the key differences between a personal loan and a credit card? So in terms of the repayment terms, for a credit card, you only pay the minimum amount or the full accrued balance by the monthly due date. For a personal loan, you have a set fixed monthly payments during set periods, right? This could be 12 to 16 months. The interest for a credit card, it is variable. For a loan, is fixed. For the fund disbursement, you have access to a certain line with the credit card. For a personal loan, you get a lump sum. For the fees, it's basically the same thing. You have origination fees. For a personal loan, you have origination fees, prepayment fees, and late fees. But for credit cards, you have annual fees, late fees, over limit fees, foreign transaction fees, among others. Okay, so bottom line here is that you can use a personal loan for debt consolidation, unexpected medical bills, home improvement projects, financing a wedding, among other things. And for a credit card, you can use it for everyday purchases. And I want to talk to you about if you have to choose between a loan and a credit card. One thing I want you to be very careful about is to know your financial situation. You got to know exactly, because people think that, oh, credit card is free money. I can just charge whatever I want on the card because the money will pay for itself. No. If you have to choose between a loan and a credit card, the first thing you need to think about is your DTI. First of all, think about your liquidity situation. When I talk about your liquidity situation, I'm talking about what? Talk to me. I'm talking to you about how much cash you currently have. Okay? How much cash is sitting in your savings account, if any? Talk to me about your DTI, your debt to income ratio. Those are important criteria you want to pay attention to. Your savings rate, your savings amount, your DTI. Okay? So you want to use a credit card. I will repeat it again. for smaller everyday purchases, a tank of gas, a cup of coffee, a cup of tea. Those are examples of purchases that are easier to pay off, helping you raise your credit score without putting you in deeper debt. You can use a credit card for a well-planned vacation. You could use a credit card for cashback opportunities. You can use a credit card for the 0% interest opportunity. This is just wonderful. If you have a high interest debt on one credit card, it might be best to transfer it to a card that has a 0% interest intro rate, right? You have the Citi 18-month 0% balance transfer rate. That's just fantastic. So don't use a credit card for medical bills, for large purchases, to transfer loans. No, don't use that. And you want to use a loan for those. You want to use a loan. You want to use a loan for a medical bill if you have a large purchase, okay? And if you want to transfer, let's say, high interest debt, you can use a credit card, but only if you have a great APR offer and you know you'll be able to pay off the balance very quickly. In other words, within the 18 months or the 15 months or the 12 months, okay? So the bottom line here is that think strategically, not just for 6 months or 9 months. Think about 12 months, 18 months, 24 months when you have to make a decision between a credit card and a loan. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still having a conversation today between personal loans versus credit cards versus the lines of credit, and we're doing a compare and contrast, and I'm explaining to you how to use them strategically, not only to boost your credit score, but also to live a financially responsible life. Let's talk about credit card versus line of credit. Okay, if you have to choose between a line of credit and a credit card, what do? Big decision time. Talk to me. Well, I've already explained to you what a credit card is. Well, you probably know already what a credit card is, but I've also explained to you what a line of credit is. Okay. One thing you need to understand is that a line of credit and a credit card, they are very similar types of revolving credit. That's a key word here. Those two products are revolving types of credit. With both, you are approved to borrow up to a certain amount, but you don't have to borrow any money immediately after you are approved. You can choose when you borrow and how much you want to borrow up to the account limit. You pay interest only on the amount you borrow, and you can borrow again and again as long as you don't owe more than the limit, okay? But there are some differences. First of all, you have credit terms and limits. Those vary by lender, okay? One thing you need to understand is that the APR on a line of credit is often lower than the APR for credit cards. And the credit limits for a line of credit may be higher than for a credit card. Okay, so think about those before you make your decision. You also have to think about access and rewards. So credit cards provide a convenient way to make purchases on an everyday basis, right? And as a matter of fact, they will give you what? They'll give you a grace period during which you can avoid paying interest at all. But for lines of credit, you don't have that feature. That feature is not available on lines of credit. And many credit cards offer cash back and other rewards for spending, which credit lines do not. So this is what you need to think about, okay? So, and also you have some application requirements. So applying for a credit card requires you to provide accurate information about your finances, while applying for a line of credit without a credit card typically requires documentation to prove your income, okay? So this means that it can be a little more complicated and time consuming to apply for a credit line. So this is one thing you just need to be very clear about. And one thing I also need to say here is that a line of credit works in a very specific way, because we're talking about what? Money. Your issuer gives you checks you can write to access your line of credit. That's it. You can deposit them in a bank account by transferring in person, by phone, or through your bank's website. That's it. Now, if you have to choose between a line of credit and a credit card, The debt decision is very simple because, again, we go back to what I said earlier. What is your liquidity situation? What is your cash situation? Are you struggling, or are you just are you comfortable? Okay, because at the end of the day, what is a credit card? A credit card is a payment method. That's what it is. It allows you to draw on a line of credit to make everyday purchases online, over the phone, and in person. That's what a credit card is. That's all it is. Credit card, credit card, credit card. When you hear that word, that's simply what it is. What is a line of credit? It's also a payment method. The only thing is, for a line of credit, you have to basically transfer the money to be able to access it. The biggest difference is that with a credit card, you cannot get the money out. If you go to an ATM machine and you want to get money from your credit card, you know you'll be slapped with 30% APR. Nobody wants that. But if you are looking to get money from your line of credit, nobody was going to charge you any interest because that product is money. The line of credit is money already. Okay, so this is something that the financial institutions, financial industry rather, has put in place to make sure that people are not tempted to use credit cards as a source of money. It is a payment method, not a source of money. Big difference. Okay, so one thing you need to be very careful also is that you need to be careful about is that when you use a credit card, please make sure you're not paying just the minimum amount due. No. For instance, if you owe $5,000 on your Navy Fed credit card and the minimum amount due is $30, please do me a favor. Pay more than $30. Don't pay the $30 they're asking you to pay, because this will be crazy. If you owe $3,000, for instance, try to pay $300, try to pay $400. Otherwise, don't charge $3,000 on the credit card in the first place. Okay, this is how people actually rack up debt and they can't pay it off, and before you know it, their DTI goes up, their credit utilization ratio goes up, and they have a low credit score. You don't want that. Okay, and remember that there are alternatives to a personal loan or a credit card. You can have a home equity loan. You can have a HELOC, right? This is a home equity line of credit. You can also have a cash advance. This is something that you can think about. It is an option provided by many credit card issuers that allows you to withdraw cash against your credit card limit, and something you need to really think about. The APR is high though. Okay. Let's talk about alternatives to credit. Money, 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 right? So whether you apply for a personal loan, a credit card, or a line of credit, you're looking for money to supplement income, or you're just looking for money to take care of a financial situation, right? So think if you've considered a credit card or a personal line of credit or a personal loan, and neither seems to be a great option, please explore other options. First of all, work on your savings. You might want to get a second job or start a side gig, whatever it is, trying to bring in additional income. Okay, don't always rely on debt to finance your life, to finance your family's budget. This is a bad decision. If your job is to be unstoppable in terms of managing your finances, managing your credit, boosting your credit score, you want to work on savings. If you have a skinny FICO score, you better have a fat checking account. That's just what it is. The ideal situation is to have both, right? You want to have a fat checking account and a fat credit score. You also want to think about rent reporting. Nowadays, there are a lot of resources out there that allow you to report rent to the credit bureau. So there are services that charge you like something between $2 and $10, and they will report your rent to the credit bureau. So this is an additional source of boosting your credit score, right? Because if Equifax, TransUnion, and Experian know about your great tenant situation, this could boost your score by 50 points or 75 points or 100 points, whatever the amount, take it. You also want to think about getting collateralized loans, right? I'm talking about having a car loan or equipment loan, because the fear of repossession / foreclosure will force you to be financially disciplined. You want to check your credit score often to make sure it is accurate and healthy. Very important. You can go to annualcreditreport.com. You can go to Wallet Hub. You can go to Nerd Wallet. You can go to Credit Karma. You sign up. It's free. The services are free. And you can access your credit score every day, every week, every month, whatever. But you're able to know exactly what's going on in your credit. So here is the decision time. Let me talk to you. Big decision time. Which one do you need to choose? It really depends. So right now you're listening to me, you're just thinking, all this is good, but how do I choose? Do I need a loan? I mean, cash is tight. I need something. I need extra income. I need extra money. So I want to borrow. Should I get a credit card, a personal loan, or line of credit? Very easy. It depends. It depends on a constellation of factors, okay? And I'm going to break it down for you. What is your financial situation? I want you to talk to me about your financial situation. That means what? What is your net worth? How much money do you have in the bank? Net worth means total assets minus total liabilities. So when we talk about total assets, we're talking about what are the things that you own. And we're talking about liabilities, we're talking about what you owe. So you have to take everything you own and you want to subtract everything you owe to find your net worth. And ideally, you want to have positive net worth. Talk to me about your employment. Are you employed full-time, part-time, seasonally? What is your job status? Talk to me about that. What is your liquidity? Your liquidity is a little different from your financial situation, because when we talk about your net worth, I mean, liquidity is different from your net worth, because when we talk about your net worth, we are speaking about total assets minus total liabilities. Now, when we talk about liquidity, we're only talking about cash. Cash is only one asset. Your total assets might include cash, a home, a car, all that kind of stuff. But liquidity is purely about cash. Cash inflows and cash outflows. How much you have in every month coming in and going out. What is your family situation? What is your current DTI, your debt to income ratio? What is your credit score? And are you a homeowner or tenant? Talk to me about those things, because this constellation of factors, okay, this variety of criteria will determine whether or not, first of all, you can qualify for a personal loan, a credit card, or a line of credit, and if yes, which one you should get. And you also have to think about how urgent is the expense, how significant is the expenditure you are going to you're going to need the money for. So our pick in today's conversation, so after analyzing the dichotomies and the similarities between a personal loan, a credit card, and a line of credit, we don't have a favorite, because the credit product you choose will depend on your situation. Simple as that. It will depend on your situation. It will depend on what you need the money for. So at the end of the day, I want you to think about the fact that credit cards are great for everyday expenses, or when you have to make a vacation trip. A personal loan is great for debt consolidation, unexpected bills, home improvement projects. You want to finance a wedding or other large events. A personal line of credit is great for home improvement projects, overdraft protection, emergency situation, or you want to supplement irregular income. That's the bottom line. Thank you so much for your attention. I really appreciate it. God bless you. I hope that this video added value to your life, and I will see you next time. But until then, remember, stay marvelous.